Good morning, it's E for MarketWizards.com and eMiniWizard.com. And it is Friday morning just before the open. A reminder that trading is risky. Use capital you can afford to lose. Next week we've got a presentation, November 8th, 4:15. Hope to see some of you there. Disclosures are on our website. And make sure that you are using trading capital you can afford to lose. It's risk capital. Got the open coming up. Anybody who has shorted, we had said let's use this 68 to 72 as our resistance zone. We needed to break 54.5, this post right in here, to get anywhere further backwards. And if we do, be careful of 52 to 53. That had been an area of concern. And if we could get through that, then obviously looking for targets 48 to 46. This 45.75 being a very important marker right now based on this scale. So I'm suggesting that if you've had a nice swing pre-market, you make sure you get paid, put it in your pocket. This is a great trade, and truthfully, it's never easy to fight the push. This is a lucky trade, but what are you going to do? Buy the high? You know, we'd said nibble short, see if we could get any traction. As a matter of fact, when we were at 54s to 57s earlier, I said, I don't think the high's in yet. We had that one more little blow off top, and then we came back under and stayed under that prior high at 64. So that was a clue that this was a little head fake. Same thing we got down here at the other end when we got below this 27 area. Yesterday, we talked about this as being our next resistance level based on this scale and this support. So we can see where, for now, we have stalled. So make sure you're paid by this 48 to 46 as suggested. And Mike, thank you for your posts about the rain line on the 5 Globex. Said I was using the 15 to take a look, and you can always scale up and scale down. And this is a nice call by Mike to make sure you take a look at the rain line on the 5. First thing I looked at was the 10 today, and I said, okay, let's take a look. When I get up, I'm saying, well, let's take a look at the 10. Let's take a look at the 15, which I did over here. And I said also the 30. Okay, and you can see where this 30, I said I want to be aware of the 30 today because it held yesterday beautifully. And now this is our second push here at the 30. So I've suggested that we use 42 as our aggressive support. And that's for a profit-taking push. Okay, and that's respecting yesterday's high at 41. So anybody that's playing long side, we don't know that this is going to be a killer trade that comes out the top. I suspect probably not, and certainly not right away. But this is the range that we now have to contend with. Anybody who has taken a long side trade with the trend, make sure you are paid by 57. That should be a key area today. And this is a nice little profit-taking swing off of our 30. Going to be opening up. Those of you who have something in your pocket, keep it there for now. And let the market wiggle around a couple minutes and then look for a reasonable trade idea. Should get a couple of head fakes first thing. And this was our predictive model. Yesterday, we started bumping into the next zone, and we find this is the best resistance zone based on this. And we know that the 56.25 is the flipper right here. This is the directional move, above or below. And then the last couple of days, we've been taking that out. So we're going to keep an eye today on smaller rotations and try to hit and run and grab what we can out of what I consider to be an egregious type of overnight move. And anybody that is playing long side, most important thing to do is think of it as a scalp with the trend. And if you get your first few points, then you can trail. But I think that 58 is going to be a key idea right now, 57, 58. This was that breakdown that we had talked about. You can see where we got into the pipe. Going to have to use some discretion today and understand that we're going to get some head fakes in two directional trading. This was our breakdown. And I said, we've got to get by this 50. Remember I said that? This was our, so we said, let's use 52 to 48, representing that guy. Still got to think about that as trade evolves today, because any pullback today is still a contra against today's push and against the week's push. So you can still buy, and I suggest if you're buying, you want to keep an eye on that 41, 42 as a key area. We talked about that pre-market, that the bottom of the pipe is going to be near the gap. So I think we've probably got a range trade this last swing before anything else. So you're shorting the bottom of that range right now is what I'm suggesting if you like a short side trade. And this 55 right up here, 58 area should be key. So if you're buying, you're using a 42 stop, and don't even think about letting it run against you in this type of an overnight move. Best shorts are done because we've already had the part of the 456 trade already done. And anytime you get a gift, and I know there's no such thing as a gift, you've earned it. But anytime you get yourself, you're blessed with a good trade, lock it and protect your profits. So the spike high right here is the key. Got to keep it under this spike high if the shorts are going to dominate. And it probably is going to be more choppy than you think. And I'm going to say it one more time. If you are lucky enough to have gotten yourself something out of this pullback swing, don't be quick to throw it away. Spread your trades out over time. This is a normal area for the boys to come back in with a second thrust.